Hello, I'm just going to do a really quick video. I always say this and it goes on for 8-10 minutes, but I'm going to try and keep it really short and concise and to the point. Is the market going to crash? Is Brexit going to cause absolute mayhem? Are property prices going to crash? The answer is, at some point there is going to be a recession. The same thing has happened in the economy for the last 300 years, and yet people just get absolutely terrified and it's such an emotional, dramatic subject about recession. But the facts are, there's always going to be a recession because the economy runs in cycles, and there is no point being in and out of the market. For me, the only place to be in property is long-term, a long-term investor, and you have to have a long-term view. So, for example, in 1991, do you know the UK average house price was £55,000? In 2007, before the crash, property prices had gone from 1991, 55 grand, the average house price had gone to 180,000. Then we had the recession and they dropped from 180 to 150. And now, today, as of June of this year, the average house price is 230 grand. So do you think the people who bought in 1991 for 55 were bothered about that little correction? I don't even call them crashes, they're corrections. It's where the property prices have gathered too much momentum, they've picked up too fast, and then they need to correct. So they usually come down by 20%. But over long periods of time, property prices go up way more than that. So over long periods of time, property prices are going to go up, then they'll come down, they'll correct, and then they'll go up again, because property prices keep up with inflation. And that's the important thing to realise, is that it's one of the only things that keep up with inflation. And also, the best thing about property is it's a commodity that people really need, not just now but forever. People are always going to need a property to live in. So it keeps the value. You know, the way that you can see if something's going to hold its value or not is, what's the demand for it? That's it. What's the demand? Well, huge demand for property, which that holds the value of something, because it's always going to be necessary. So these are my tips on how to protect yourself, because we know there is a recession coming. What do we do to protect ourselves? Number one, you buy the property for income, you buy for cash flow. Do not buy property on emotion. So you want to run your figures to make sure that after all the monthly costs, you are making an income. So you right now, if you're buying a buy-to-let, it should be making between £200 to £300 a month profit after all of your costs. What a lot of people are doing, they're buying property on emotion because they have an inkling that the market's going to go up and that property is going to go up in value because it's in a good area. Well, that's gambling, isn't it? I mean, you hope it's going to go up, but what if it doesn't? What if it goes down and you've now bought a property, you've paid too much for it, and it doesn't make you any money on a monthly basis? You've got a liability on your hands. So make sure that you're buying the property at the right price. Never pay too much. You want to be buying at a discount if you can. And make sure that the property's gonna make you money on a monthly basis, because if the market does go down, that's your protection. You don't need to sell it, you hang on to it, you just keep collecting your monthly income every single month. And then if you want to sell, you just wait for the market to pick up again, for it to correct and to start picking up, so that you can sell it then. But in the meantime, instead of it actually costing you money, which is what a lot of properties do, people buy property, it costs them money, there's a recession, they lose their job, then they can't pay the mortgage. It's a really frightening place to be. So you have to make sure that you're sticking to the key principles of not buying on emotion, buying on facts and figures and numbers. It's as simple as that. You pick them up discounted, you buy for the income, and then over long periods of time, you're gonna get that growth anyway. So don't get caught up in the emotion and the drama of being like, this is a great area, it's definitely going to go up in value, because at the end of the day, nobody actually knows that. You know, you can have some inside information where you know there's maybe going to be some development, but ultimately nothing in life is guaranteed. So the way to protect yourself is to make sure that it makes you money from day one. If it makes you money now, if in the future it goes down in value or up in value, it doesn't matter, because you can just keep hold of the asset and keep on collecting that money. Just a little short one there, so I hope you find that useful, and just let me know what you think with any comments. Bye.